Stocks are on pace for their best week of the year. However, futures under a bit of pressure right now, kind of mixed. What's your outlook for the day ahead?
I thought you were going to get to my WEX word of the day. So when I think about what my outlook is for not only like the next day, but for the next few weeks, yes, stocks are actually on pace for a great week. But when we look back to like last week, it wasn't the case, right? And so I'm thinking about potential volatility continue through the end of the year. And I'm looking for these opportunities. And actually that is not to steal your thunder, but that is my WEX word of the day is opportunities.
No,
so,
it's really your thunder,
have come down.
It's your thunder. So we're gonna show it right now. So your WEX word of the day today is opportunity. Give us a sense. Where do you see the opportunity?
So, valuations have come down, and so there's segments of the equity market that are on sale. And so when you look at the S&P 500 weighted index, it's trading at 14 times earnings. When you look at value stocks, right, the Russell 1000 value index is trading at 13 times compared to some of these high growth tech companies, right, or these like Magnificent Seven, right, the NVIDIA, the Tesla, the Apple, Amazon. Those are trading at 30 times. So there are opportunities in the market that are on sale right now.
All right, so I know you've been watching the Russell 1000 since we got that hawkish pause, performing right now just about in line with the S&P and both the NASDAQ, so doing pretty good. Why do you see the opportunities there? Because in general, small caps are more vulnerable to higher interest rates moves. Does this mean you believe that rates are going to stay lower for longer now?
Not necessarily. Again, right now I'm just looking at pricing. And so, of course, value stocks are kind of trading at a value, right? We're really focused on price. But again, when we're talking about interest rates, yes, we're at a pause right now. And I think that, investors should really be paying attention to those parts of their portfolio with like the largest exposure to like time value of money, right? So, yes, some of these like high dividend paying stocks are going to have more exposure to that, right? And so these are stocks that really may have been negatively affected by inflation, and they may have inflation may have like eroded their purchasing power. Okay. So that's why I think that value stocks right now have an opportunity.
I'm just agreeing with you. Like we're looking at the chart right now, we're seeing those small caps moving right in line with the S&P, the Russell 1000 S&P making pretty much the same move. And as you mentioned, in your mind, they're kind of cheaper right now. So as we look for other moves, what other moves would you make right now as we see this hawkish pause again and small caps moving higher? It appears that maybe that we're seeing the market broadening that a lot of people were calling for.
Well, in addition to your equity position, I would really also be thinking about the fixed income position, right? And so kind of considering like reinvesting these short-term positions, these short-term bonds into longer duration bonds. So, right now, there are opportunities in the bond market, and you really kind of want to take an advantage to like lock in those long-term rates. Okay, those long-term yields.
So you're saying the long end of the curve is where you're looking for opportunities. Are you talking a 30-year, a 20-year, a 10-year? Where would you want to lock it in at? Is there one in particular, or just generally that end of the curve?
I would say generally the end of the curve, but really kind of taking a look at what an investor's current portfolio is. There are a lot of people that really took advantage of cash, which I still love, but then also these short-term yields and rates. But I would think 10, 20, and up to 30 right now, just to kind of have a more well-diversified fixed income portfolio and cover yourself in the long run.